share my screen, and the first item here is the actual website. So when they had the press conference on September the 21st, this was part of a very well orchestrated beginning of a communications plan and strategy that I am going to look at from a point of view of a political scientist and the political messaging. So what I effectively have done for the slideshow presentation is copy and pasted what's on the website, and so that's what I'll do. But just to give you, a flavor of the artwork or the marketing pictures, it again is a very inviting type of scenery, obviously, that the government of Alberta is portraying. I'll just start here from the beginning. So this is an endeavor that, as I'll say later on, is a little bit of a surprise. And right now, as you're aware, there's quite a bit of back and forth between the federal Liberal government ministers as well as the UCP finance minister and premier. So we're introduced to this subject as a what's in it for you proposition. So it ultimately, the signal here is it's a pocketbook issue. So what the government is trying to lead Albertans into believing is that the promises which come on the following slides are based in reality, and that there is a very good reason based on those promises for Albertans to vote in a referendum and to apply to the government under the Canada Pension Plan Act to proceed to set up an independent Alberta pension plan. Now, the messaging then starts, I would say, fairly aggressive, and is based on the LifeWorks report. And LifeWorks is the former Morneau Chappelle, which is a actuarial and consulting firm based out of Toronto, and was recently bought by TELUS Health. Now, one of the interesting things is when you go through the web page, you do have to scroll a little bit down to find the report, and there is a 93-page report by LifeWorks. One of the most interesting pieces, in my view, is that normally these kinds of reports, whether they're by investment bankers or by auditors, are signed. And this particular page, where it's the sort of passing over to the government, was not signed, and the name was withheld for privacy reasons. Now, I have no idea whether that's legitimate or not, but it certainly seems a little bit strange that it doesn't allow the media to go to the actual author of the report or authors and to ask questions. So the first pitch here is $5 billion a year in savings. Now this is based on the premise that because Alberta has a younger population, a higher wage rate, and therefore higher contributions, and because the people that are contributing are younger, and therefore the liabilities don't crystallize until later, then that means, in a sense, that Albertans have been paying more premiums than they should have had to pay, given the demographics of the Alberta Pension Plan and people resident in Alberta. And then the idea here is, sorry, I'm going to just see if I can go back here. The idea is that with this $5 billion and effectively a difference between the liabilities of the plan and the contributions and investment earnings, there's roughly $60 billion of a surplus that they can run down, whether for political reasons or for other reasons, to enhance benefits and to reduce premiums. So there are a number of audiences that this is directed at, and the survey, which I'll talk about later on in the presentation, is basically trying to get a sense from the responses on how many want the bonus payment for seniors, how many want lower premiums, and that sort of thing. So the conversation is very much constructed based on unreal assumptions on this idea that the Albertans will benefit very significantly in the pocketbook. Now, Alberta seniors are an important segment of the electorate, and they tend to vote more than young Albertans. And this, again, is just sort of an election type promise, is to boost annual pension benefits. So taking that fictional $60 billion type of surplus, that would enable the government to provide greater benefits than is currently received under the Canada Pension Plan. And then they go even further. Well, maybe if you retire, you will get a $5,000 or $10,000 bonus payment at retirement. So these are very powerful things to be communicated in a very sophisticated marketing and communication program that the government has undertaken. The next slide focuses on the business owners. And naturally, it would be very attractive to a struggling business in particular, but any small and medium-sized business and large business to reduce premiums. So not only are workers seeing $1,425, which I think is really the maximum number that they could invent, would go to both their workers, who should make them happy, maybe depress wages because, or keep them from demanding more wages. And of course, it comes out of the pocketbook of, or goes into the pocketbook of the small business owner. And the teaser here is the businesses could invest that money or hire more employees. But what it doesn't say is, of course, that businesses could simply pocket the money and not invest in capital or hire more workers. Dealt with this Alberta seniors. So it's a very kind of convincing argument for small business and any businesses. And I did spend $95 to go see Daniel Smith at the Chamber of Commerce and talk with some business people. And they like the idea. So that's okay. So big paycheck. So this is the workers' benefit, and $1,425 certainly adds up. And I think in some of the literature they talk about over a 30 or 40 year span, and with investment earnings or what have you, this equates to some big money. So it is. It's a very important thing, and the last phrase here, the affordability question, is also touched on. Alberta workers could be used to meet the needs and priorities of their families. So giving some emphasis on the affordability issue, which is part of the UCP's program. Now, the biggest question is, how much should Alberta get of the 575 billion in assets at the Canada Pension Plan? And so the whole premise of this is based on 334 billion in assets. They don't talk about the liabilities though, and my estimate would be that the liabilities are about 270, which gives you the difference, that $60 billion that in effect is play money for the government. So they're claiming it would be more stable than the current Canada Pension Plan. Trevor Tome has really eviscerated that argument by looking at a number of sensitivities, particularly on the investment side. The law of large numbers also comes into play, that if the investment manager lost $2 billion, that would be spread over 35 million Canadians, let's say. But in the case of the Alberta Pension Plan, it would be only spread over 4 million people. So there's a faulty degree of logic in that kind of claim that they're making. So the bottom line is, it could mean a greater pension security for Albertans. That's the promise. And another issue which they talk about is problems of transition and portability. And they answer that on the assumption that the exit following a referendum will then lead to cordial discussions with the rest of the country on a number, and then they would work out the technical details, which Premier Smith felt was done all the time in the private sector. But talking to pension experts like Virendra Gupta and Ellen Nygaard, these are very detailed, very complicated discussions, and take a great deal of time to sort out. Now, really, this is, I think, is the final slide. So I referred to the $60 billion number. So this is a big selling point, and more Alberta, less Ottawa, consistent with what we've heard from the government of Alberta on and the Free Alberta strategy, the continued fomenting of conflict with the federal government led by Smith and her environment minister, Rebecca Schultz, and that undertone or the dog whistle is really Trudeau, and Albertans love to hate Justin Trudeau like his father, and that again is playing very much to the base, the Take Back Alberta folks. And then this lower one here, for decades, we've had a young working population and so on and so forth. And this is the claim that we've over contributed. And that there is some truth to that if you had a standalone Alberta plan. But I mean, the fact of the matter is, has been pointed out by many people, that Albertans pay the same into the pension fund, and they get the same benefits out as any other people in the Canada Pension Plan. But what the Alberta government is doing is consistent with their strategy on equalization, is to look at the country from the point of view of a balance sheet, a ledger, a balance of what we get versus what we give to Ottawa. And then to sort of conclude the point is, we'd end the continued over contribution and free up those savings. So it's a very much Me Too, more Alberta, less Ottawa, standing up, standing up for Albertans because they have been shortchanged by billions of dollars by Ottawa. Now, as part and parcel of this strategy, we have the panel, and the announcement on September 21st included Jim Dinning, who, as many of you know, was instrumental in the Klein Revolution as provincial treasurer, and then left the government to go to the private sector. And as you can see, he joined the corporate community and is an extremely well plugged in, and one might say a blue-blooded Albertan from Calgary. I also sort of did a little digging on Dinning, and he's contributed since 18 over $23,000 to the UCP. Now, joining the panel from Edmonton is the corporate director, Mary Ritchie, who has been a very prominent corporate director in the Edmonton business community, particularly with EBCOR Utilities, the Alberta government, the Credit Union Deposit Guarantee Corporation, and some Isotechnica, some local companies, and I believe Enwave is also a local company. She's not on all these boards today, but this has been her curriculum vitae over the last number of years. So she was on the Canada Pension Plan Investment Board, and in fact, the chairman of the investment board. And as they set up the original board, and Jim Dinning was part of that conversation with Paul Martin and other finance ministers, they are certainly well known to one another. Now, rounding out the trio from Edmonton is Moyne Yaya, and Moyne is a economist as well as a lawyer, and has served on the Utilities Commission. I've met him several times, and he is a very, very intelligent person. Most important, which I haven't actually included here, is that he was a member of the Fair Deal panel, which recommended that the government of Alberta engage experts to look into the feasibility of an Alberta. I just omitted to include in the slide that Moyne was a member of the Fair Deal panel, which recommended that the government of Alberta pursue investigations into a separate Alberta pension plan. And he has written some papers for the Fraser Institute back around 2016 on a Canada pension plan. And it continues work that was started by academics in 2000, Paul Booth, investigating a Alberta pension plan. And some of the findings, which I've included in my blog by Ken McKenzie and Herb Emery, raise some real questions about whether, in fact, this is a good idea at all. Now, just one interesting tidbit, which I've included on the slide, is his time at George Mason University, where he was a Robert Levy Fellow in Law and Liberty. So George Mason, and I think, Don, you would know this better than most, has a reputation of being quite a conservative think tank in economics and public finance and so on. All right, so the engagement survey. As you finish scrolling down, Albertans are asked to take a survey to give their thoughts about an Alberta pension plan. And what's most troubling, and this has been pointed out by many commentators, is that it doesn't ask a clear question about whether you support establishing an Alberta pension plan. So that's a problem. It shifts the discussion to the acceptability of an Alberta pension plan. Now, I filled in the survey 3 times, and which causes me some consternation because I shouldn't be able to do that. But it also suggests that you could be writing in from Saskatoon or Ottawa, potentially, give a phony postal code address, and you're in and answering these questions. So they will now have a research tool to slice and dice the respondents by gender, age, whether they're going to draw on the CPP, and so on. The other kinds of questions that they've asked, one which I find a little hilarious is, what is your understanding of the LifeWorks report? Now, it's a 93-page report. It is fairly technical, and to think that there's going to be more than 250 people knowledgeable about this is very doubtful, and most people would just not understand the economics of pension plans. So they ask you whether you're sophisticated or not, and then once again they can dice and see what are your comments about better benefits and so forth. As I say here, there are a whole bunch of leading questions about, do you want lower premiums or increased benefits, bonus payments, and so on. So once again, the government has the capacity to slice and dice and to develop a marketing communication strategy to move public opinion. Because, ultimately, this is what they want to do. I don't believe that they will call a referendum unless the needle has moved quite far in the direction of a majority that would support this. Now, in fact, the throne speech had no mention of the CPP. The House leader said some legislation was going to be brought in before the throne speech was tabled. So perhaps they have some internal intelligence that say, let's back off a little bit. They're also tapping your interest in particular benefits, such as death benefits, survivor benefits, disability benefits, and so on. And then the final coup de grace, I suppose, is asking questions about, okay, let's say we've got into the lobster pot, we've jumped in. How do you imagine this going on? And the LifeWorks report does give some range of numbers about establishing an administrator. There is choices that CPP or Service Canada would continue to do the administration, which is basically getting the checks sent out. And then investment manager. Now, investment manager is very interesting because they don't give a choice of the Alberta Investment Management Division. They give a choice of continuing with CPP, which, as many of you have seen, they've been advertising in I think across the country, but certainly in Alberta, how it's a plan you can trust. And has a good track record. The second choice is an Alberta government investment manager, but it does not say Alberta Investment Management. And then the third choice is the private sector. Now, in watching the press conference with Jim Dinning, Dinning made some comments around the what this would do, that this would be an enormous game changer potentially to bring all these assets into the province to be managed. And I mean, given Jim's corporate work, it would seem not unreasonable to think, and given the disposition of UCP government, that they may well be looking at jobs for the boys in Calgary, the investment managers, the securities lawyers, and so on, and that is a uh, underlying this, at least in Dinning's mind. And Dinning professes to be agnostic and open-minded and so on. But it's significant. He did work with the Western Financial Group. He did sit on the Export Development Board under Harper, and has, wide range of contacts, a big Rolodex all across the country. So, and also this is when the CPP manages private equity and so forth, they generally rely on the securities lawyers and accountants and actuaries and all that in the Toronto area. So this is perhaps a play that supports Alberta's rightful share, and we can get jobs. But what's interesting to me is that the government's not pushing this, although Travis Taves, when he was changing AIMCO and bringing teachers in, that was a big issue. And then finally, the question of governance. And the CPP is pretty insulated from political interference. And what is very troubling are comments from Smith that perhaps this is going to be Quebec Inc. or a similar situation to the Quebec Pension Plan, which has a dual mandate, which is to security of benefits under the QPP, but also provincial economic development. So that's another thing to watch for. Now, I guess my final slide is that we had thought during the campaign, she very clearly said, we're not going to touch pensions, and the NDP is fear-mongering. And then, surprise, surprise, in June or July, we have a mandate letter to Nate Horner, which instructs Horner to release the report that was delayed because of updates on the data, and to carry on looking at this with the potential of a referendum. So that's it for my take on it. Bottom line, it's very cynical. I'm very worried that the premier, who had the Edmonton Chamber of Commerce eating out of her hand, she is firing on all cylinders. But not only in the issue of sales tax, which she was quite clear that she supported that and changed her mind. On this one, to me, it's the big lie, and that's a problem. I think in democracy, and it's a problem in our politics where you can get away with that sort of switch and bait strategy. So with that, Dawn, I'll go to questions and look forward to the discussion.
Okay. So I'm trying to see if I can get a gallery here and I can see anybody put their hand up. Because if you do, silence.
No.
Well, let me, oh, sorry. There we got Alan. Okay, Alan.
And Stan's got his hand up as well.
Just a few comments of what probably is obvious to everybody. Apart from the political timing of this as being not to be addressed, but is, apart from the fact that how one would ever come up with taking over 50% of the assets, as they've already pointed out, in BC and Ontario did the same. You would more than bankrupt the National Pension Plan. Apart from the fact that it seems to be just a grab at cash to help insiders in this province get their fingers on more money to deal with. The biggest issue to me is we happen to have been riding a very nice period for some time now with oil and gas revenues. This is not going to persist indefinitely. We've had a gravy train that won't be there in the future, and I wonder how many Albertans really think ahead 20, 30, 40, 50 years, whether or not they will be as well off financially as the rest of the country, that they would be much better therefore served by being part of national programs rather than provincial programs. So I just see a whole host of social, economic, and other issues being raised here. I certainly come from the position that I am a Canadian first. We've been a continuing partner in the CPP. That should not change for security, for the natural contributions. If we've overpaid a little bit going in because we're younger, that's fine. We'll probably take it out in the long run because we're less well off in the future. So I find this as a very unsettling political overture and a gamesmanship that I just don't like seeing in this province. And we're not doing so many things properly. This just adds to the current greed. Let's take it all while we can and run. So I'll stop there, and then I'll worry about specific questions later, but let others have a chance.
Bob, any comment back?
Well, I think Alan raises what I consider to be the existential question for Alberta is whether the oil sands and whether the gravy train that has fueled the province's expansion, but unfortunately has not trickled down evenly to Albertans, and a gravy train that is very volatile. And I think the same types of arguments can be made for an Alberta pension plan. And Professor Toom was saying on my YouTube channel that the whole interprovincial migration is a huge variable, that it can go sideways, and therefore the promises of lower premiums and higher benefits just don't wash. Let alone the whole issue of investment earnings and how they're reconciling that Alberta Inc. on the Quebec Inc. model, how they would do that. And the worry being that they're going to double down on bitumen in particular, because that's where the growth is coming from, and leave environmental liabilities to somebody else in 30 years, 10 years, whatever number you want to pick. But I think it's sooner rather than later.
As they have with orphan wells, yes.
Yeah.
Stan?
Yeah, am I muted? No, I'm not, for a change. So, yeah, I think that's a really good point that we may find ourselves a have-not province again before too awfully long, and be in a better position to appreciate that pension plans and insurance are about risk pooling and with the rest of the country that we belong to. But do you think my real question is, do you think that Danielle really thinks this is going to be an economic advantage, or is this just part of her ideologic kind of moving towards Alberta independence plan?
Yeah, I think it is moving towards an Alberta independence plan, Stan. If you read the Alberta Free Alberta strategy, they have a whole range of fronts that they're going to wage war in moving towards a kind of establishing Alberta like Quebec. But I think what few people realize, but I think people in the finance department and energy department in Ottawa realize, is that if we're not producing 3 million barrels of oil or bitumen a day, that means that the Canadian dollar would really effectively sink like a stone, and that Alberta, to some extent, whether rightly or wrongly, has a knife to the throat of the federal government, and they feast on the surplus from the energy industry too, through taxes and so on, not royalties. But I can remember Herb Emery, and he's now at UNB, but Herb was saying that he could imagine Alberta being like Montana, and where all the mines have been abandoned and so on, and very small population. So this is perhaps the motivation, though, for a separate Alberta, because it is, to me at least, becoming increasingly clear that the argument for fossil fuels is getting rather thin, and the support of oil and gas companies is eroding not only among the public, but among public servants as well, that do have the capability of making decisions. Stan, did you have a follow-up?
Oh, sorry, I'm done.
I have David.
Thank you very much. I just wonder whether you could share, Bob, with the group here. You and I were at a presentation, what was it, late last week, about the plan, and your colleague, whose name I was struggling to find while you were just answering the last question, but he pointed out the performance and the structure of the CPP, and it may be worthwhile just sharing with the group here, both about the nature of the performance of CPP and how extraordinarily well it has done by any international comparison of pension boards around the world, I think.
Yes.
And the importance, the analysis, but I think, which was basically say the explanation for the high performance of CPP over a long period of time has largely been because its governance structure is such that it mitigates against political interference. And I wonder how that might compare, your speculations about how that might compare with our experiences in Alberta, and in particular about AIMCO and the government interference in the governance of that investment manager. Yes.
Now, Virendra Gupta was the executive director of the Alberta University's academic pension plan for a number of years, and before that, a pension expert. And the Canada Pension Plan, based on its, I suppose, returns over 10 years, they've shown and they've advertised this across the country that they do better than everyone, or at the top of the class. Now, I do have a problem to some extent with that, because past experience doesn't mean future experience is going to be the same. And as you pointed out, David, I think in a question to Brenda, that typically returns are related to risk. And to what extent is there a lot of risk embedded in the CPP portfolio that, could come back to haunt them? So I think in some ways my dear friend was drinking a bit of Kool-Aid from the CPP. I'd be a little bit more skeptical. These organizations, it's not clear to me who they're accountable to. They're kind of like Alberta Blue Cross or Alberta Motor Association. You've got board members and management, but it's not clear that there's any mechanism for accountability. But yes, I think in research I've done, David, it's very clear AIMCO is a laggard, and 3% difference, which I think it is, if I remember the ad correctly, between AIMCO and CPP, that is billions and billions and billions of dollars in excess earnings or in prudent management. Now, they are in a situation where at 500 or $600 billion, they can diversify very widely by both the nature of the securities and geography. And smaller pension funds typically don't have those resources. But the literature is not, it's not clear whether small is worse than big. This is from some of the studies that I've looked at. So I just worry to some extent that the CPP is perhaps overselling itself, and I have clipped out here from the Globe and Mail today. I'm not sure the camera will show this, but they had an ad saying, the plan you can trust, 50-year track record, free from political interference, your pension's portable, spreading risk among 21 million Canadians, financially sound for at least 75 years. So that the danger is that even if Danielle Smith puts together a governance structure that prevents political influence, once you've made the decision and set up shop out here, another future government can change it for whatever reasons they come up with. And that's the problem versus the CPP, where you need 2/3 of the provinces with 2/3 of the population.
Can I ask a question? We've only seen the very best circumstance where we get such a large fraction of the CPP. If, as they've said federally already, that it's maybe more like a 16% enhancement versus 50%. But if you take the numbers in between, what happens to all these provincial numbers? Has anybody in the province taken the time to put down the cases for various assumptions that if we got no more than a population base versus another 10 or 15% versus 20 versus 50%, what happens to all these numbers that the government is running around?
Well, I mean, Trevor Tome certainly has looked at situations about if a certain amount of money was pulled out from the Canada Pension Plan, more in the $100 to $150 billion range, what that would mean to the premiums to maintain the indicator that they most look at, the actuary looks at, which are assets versus annual payments, and they would want to keep that. And there is room to actually today take the Alberta Pension Plan away for a moment to reduce premiums. But once again, if you reduce premiums, you're reducing investment income and so on. You're increasing the risk margin. So I'm not sure I answered your question, Al.
Okay.
Yeah.
Well, I
You
was
wanna-
thinking
You had
more.
your hand up. Yes.
Go ahead.
You're muted. Don, you're muted.
Sorry about that. Bob, I'd like to ask a question that's just on the edge of what you were saying. And so feel free to say, I want to get into that. But some of this has me wondering, like, what's the difference between this and the Alberta government seizing control of my investments and depositing them for control with, say, ATB? And more specifically, what, like, I have contributed to CPP all my life. What authority does the Alberta government have just to take control of these? I mean, is it clearly a provincial right, or does it have to be negotiated? And if it has to be negotiated, what form would those negotiations take?
Right. So I believe that the requirement to exit the plan is that the benefits have to be comparable with what the structure is. And the up until recently, it basically was 25% of the maximum pensionable earnings. And that was what you were guaranteed. Then there've been some add-ons to raise that up on a fully funded basis. But Don, that raises the question that I was puzzled with going back to Kenny's time in government, and that is the infatuation with getting the teachers' money into AIMCO, taking away or giving back the monopoly that AIMCO had that was negotiated under the NDP government and so forth. So there certainly is within the UCP financial players that are salivating at getting the access to these assets. And I worry about that because the cost of private pension fund management normally is higher than what you would have with a government plan. So that's problematic. On the legal, are these monies held in trust? I think that I don't have the answer to the question, and it may be part of that whole comparable. Comparable with the CPP. One of the issues that I don't think was fully explored in the debate around pensions in Alberta. So just to finish up, Don, I think that there is a concept that while the phraseology is your pension, your choice, I've written a different phrase, which is your pension, their choice. And that, that's a really worrisome sign. And the way they're undertaking this engagement, I've said it before, is very cynical. And it's unfortunate that somebody of the stature of Jim Dinning, who has a lot of credibility in Alberta, is agreed to participate in this.
I see Walter's hand, and I see Stan after that.
May I ask, what do you think the odds are that this will go ahead? And if so, what do you think will actually happen?
I think the odds are less than 50% that it will go ahead. However, the general level of financial literacy in this province is probably not that high. And if you look at the history, I think back in 1935, and I wasn't alive then, but Aberhart swept the province with his social credit ideas. And a big part of that was a $25 a month social dividend that some people were lining up for after the Socreds won the election in August 35. So I think, as I said before, the government hopes that Dinning and the panel and some of the feedback will be able to be used effectively in this $9.3 million advertising campaign to push buttons. Now, one of the principal groups, of course, is the business community, and they're not fully on side here because there is a lot of disruption, and if they can get to the Canadian Federation of Independent Business, which Smith worked for 20 years ago, get their members rallied up and get the business owners talking to the employees and revved up about, you're going to have $1,400 a year in your pocket, that the needle may move. Now, in my conversation with Trevor Tome and Ellen and Virendra, Trevor didn't want to make a prediction, but eventually he came around to say he didn't think it would proceed. So I'm hoping that he's right. I do think that it is less than 50%, but stay tuned. The other thing that I would just add, which really puzzled me when they had the press conference and set up the website, is it's not clear to me that Dinning's report is going to be made public at the end of May. So again, this is very troubling. It's not clear to me whether the findings from the survey will be made public. And as I'm sure some of you know, the NDP has been rallying the troops on opposing this, and the Alberta Federation of Labor and Public Interest Alberta, they've been mobilizing through their unions a campaign opposing that. How that's going to play with the general population, I don't know.
Dan?
So even imagining the worst from Alberta, which is always a reasonable assumption, the rest of the country is going to have something to say about this. Presumably every other premier, who knows about Scott Moe, but every other premier is going to be opposed to this. I'm not sure what the rules are, what the process is, but it's hard to imagine that at the very best it would end up in courts for years.
Yes.
Isn't that likely the case?
That is likely the case, Stan. Because, in looking at section, I think it's 113 of the CPP Act, and that's what LifeWorks followed, it's not an unreasonable interpretation if you make these assumptions. The section, unfortunately, has not been amended because it wasn't an issue about anyone choosing to leave. But in 1997-98, there were very, very fundamental changes to the CPP, which established the board and the independence and so on, and the mandate, which was part of Paul Martin's liberating institutional investors, pension investors, to invest outside the country. And there were limits there that he changed. So it's a very interesting story, and that's a sideline. But the prior to the reforms, essentially, Albertans contributed, say, $100 million a year in premiums and businesses, and the CPP would invest $100 million in Alberta government bonds. And that was the way it worked. And so that structure lasted about 30 years. And then we have a completely different structure. So it really is two different plans. And the logic that was contained in the early Canada Pension Plan Act was to accommodate Ontario, which was thinking, well, maybe we might decide to set it up. And so those are the arguments the courts are going to hear on the interpretation of that section. But it will be interesting to be a fly in the room tomorrow, or on Zoom tomorrow, when the finance ministers have their Zoom get together.
The question of portability is a part of this as well. What happens now if someone from Quebec who's been paying in to the Quebec pension plan moves to Alberta? What pension do they get, and from whom? Well,
if they would continue, my understanding, Gordon, is they would continue to get a check from the QPP. Now, in the case of somebody that is, and this is not clear, somebody like Herb Emery, who has moved to the East Coast and contributed all his life in Alberta, the contributions, if Alberta set up their own plan, does that mean the liability, which was in effect incurred while he was working, transferred to the Alberta Pension Plan, and then the corresponding assets would then be sent from the CPP to the APP? And that's a little bit beyond my pay grade. And even
sounds like a financial nightmare.
Yeah, these issues are not simple. The Premier kind of glossed over them, saying, oh, they do this work all the time in the private sector. But this is a political debate, and it's a zero-sum game. So it's going to be highly problematic if the referendum goes ahead, to figure out how to divide the spoils. In a way, it's a little analogous of if Quebec separated and the dynamics around the debt. How much debt does Quebec leave with?
Don?
A quick question, Bob, and thank you for this, but you alluded earlier to the LifeWorks report. You know me, so should I read it? Would it repay the effort?
I would read the executive summary.
I did.
And
okay.
get the gist of it. That's what I would do.
Thank you.
One of the other concerns, I think back to the days when the university's pension plan was created. And one of the reasons was the government ran the pension plan before that, and everybody was busy paying in their premiums, and the government was using that money in general revenues. And that was one of the arguments that led to ultimately the Universities of Alberta Pension Plan being created. If AIMCO gets to manage this whole bit, what is the power of the government to influence them in terms of where all these monies go?
Well, that's a $200 billion or $100 billion question, Gordon. As I think that if they were wise in how they position this going into a referendum, I think that they would, and maybe Dinning's report, if it's released, would speak to the importance of political interference and good governance and all that sort of thing. So in an ideal situation, you would have a board that isn't appointed the same way as AIMCO, which are all order and council appointments, which means political appointments or the potential for political appointments. There's an elaborate sort of nomination process for the CPP. So I'm just not comfortable with the notion that you can come out with a good governance platform, and then a new government comes in or a new premier comes in, and they say, okay, well, we've got to finance fossil fuels because nobody, the banks aren't lending anymore, and that's the problem. And there's been hints about that. And certainly there's a constituency in the Calgary business community that could see that as a big advantage to their companies.
Yeah, that's the kind of thing I worried about. Yeah.
Yeah.
Any further questions?
Just one follow-up to
Yes,
my
Alan?
original, my other question. From Taves or anybody else, are there actually other economic studies that have been done in the province and put out in the public domain that we can compare with the rosy numbers presented by the government?
That's a very good question, Alan. And Trevor Tombe wrote a paper, and he was working on this for about a year. And Trevor describes sort of the origins of the paper, which was published and released remarkably on the day of the government's press conference. And Trevor comes to a very, very different conclusion, and that the number would be closer to 100 to 140 billion dollars. And he kind of works through the logic on that. And that, I think, is the only piece of work that's very well done. Trevor's very thorough kind of analyst. And that, I think, is what the government needs to hang their hat on, a number that is considerably less than the 53% that they're claiming they could take out.
Yeah. Yeah.
Walter?
Thanks, Bob. I didn't know what this was all about before your presentation. But let me ask you this, and shows my great ignorance. Suppose Alberta says we're going, and the feds say you can't have any money. Goodbye, good luck. Now, who settles the issue?
Well, I think, as I said in conversation with Dawn, it will go to the courts because the Alberta government, and Smith spoke fairly eloquently at the Chamber of Commerce last week, that this is what the Act says, and we're just following the formula, which essentially is the contributions, plus the investment earnings, minus the benefits payable to Albertans. And now the benefits payable to Albertans might be a little problematic and maybe be a little less or more because of people that have moved to Victoria or other parts of the country. No, to come back to Alan's point, portability is very important, and that's one of the salient points that the CPP and Virendra made is the ease by which it's seamless. You're a Canadian citizen. You're not an Albertan first and a Canadian citizen second, and you share the same benefits and you share the same pain of paying premiums.
Any other questions? Because if not, it's time to thank Bob very much for the introduction and answering all the questions. And I thank you, and we'll be signing off.
Okay.
So, okay.
Yes, thank you very much.